Thank you very much, Ruth. I said on the way in to her that this is going to be a lot of love from me today, so just get ready for that. It's an honor to be back with you. I mentioned to Dan Lonzo that when it's a little bit intimidating to get invited back for the second time because the might not live up to the hype, as they say. So we'll try the best here this morning. I do want to note that I appreciate the support of a lot of family and friends who are here today. My brother Matt is here at the table. My brother-in-law Jerry Murray is in the back, and my sister just arrived with her daughter. Thank you, Kim, for joining. But it's great to be back among so many friends. And I am actually not a Messiah College grad, so it's really quite an honor to be a Penn Stater who gets to go a second round with you. So I'm going to jump in first with a video, just a little note on the video for a little bit of context. There's going to be at least three languages being spoken. The gentleman who's speaking English is the client of Sirona. He's the fund manager. The gentleman who's speaking French is the president of the milk cooperative, Revitalization. And then the farmers are speaking Arabic, mostly. Some might be speaking French. The video was produced through generous donation of Virginia Shaw, who's a Canadian industrialist who has a big heart for this type of thing and is a big supporter of 10,000 Villages, among other things. She recently sold her company for well over $1 billion and is now doing philanthropic work to try to aid the poor around the world, among other things. The video was produced through her generosity, through Via Mita, that I helped put this together a couple of years ago. But it's going to touch on a few things which I'll come back to in my remarks. If we can go to the video. Yep. Okay. All right. Well, when you get back to your office or your home this evening, go onto the Sirona Fund. It's sironafund.com, and you go under videos, and there's a video there. It says Vitale. If you would, I'm just going to do this. Take this down. Okay. All right. What's the bummer? So we'll get back to this slide in a little bit. I'll come back a little bit to my personal history. Some of you who came a year ago heard me speak about some of the work I'm doing in Harrisburg, Pennsylvania, on impact investing there locally. Today I'm going to focus on impact investing globally. And how I came to this, I think, is some of you have heard this. I think I mentioned this when I was here before. But a lot of this is derived from my experience in Bolivia, in South America. I did a year-long SALT program through Mennonite Central Committee right after college and spent a year working in economic development in Santa Cruz, Bolivia. That was a very impactful year for me. Those of you who have served abroad probably agree that more often than not, at least in a short-term thing like that, you learn far more than you were able to give. The impact on my life, I think, was far more than I was able to impact the lives that I touched there. But one of the things that struck me there, that stayed with me, has really influenced my career, having studied economics, is that the lack of capital. What happens when there's a lack of capital? If those of you who've studied entry-level economics know there's three things that go into production: land, labor, and capital, right? Land is abundant throughout the world. Labor, even more so in a lot of places, but often what is missing is capital. And you can have land and labor, but if you don't have the means to start a business or fund that business, those things are not sufficient to have economic development and production. So it struck me then, as a young 20-something, that if I ever had the opportunity to come back, as it were, to Bolivia, I want to figure out how we can provide more capital to people who really otherwise have the skills to be productive members of society. And while I have not gone back to Bolivia other than for a brief trip after law school, in a lot of ways it is really coming back to those principles that led to what I do today, both domestically and globally. So I give a lot of credit to Mennonite Central Committee, and one of the things that a couple of folks at Messiah mentioned to me is to kind of intersperse through the remarks is what can what can you do on the topics? And I'll kind of come back to those themes. And one of the things is if you or your family or kids or relatives ever have a chance to serve in a developing country, that experience is truly life-changing. Whether it's a tour with META, whether it's a year of service with MCC or someone else, it's invaluable. It's something that I think frankly, every college student should get out of their college and go abroad. I'm not sure if it's a requirement in Messiah yet. I know some colleges are moving towards it. I think maybe it is to serve overseas. So that's really what led me to be interested in these topics. But it was really when I got involved with META that spurred on impact investing. I had the pleasure of being involved locally with META a little bit, like having grown up and going to Lancaster Mennonite and being a Mennonite. Was involved with Young META a little bit. But my first real experience in this was Gerhard Priest, who is now the president and CEO of Serona Asset Management, was at that time the financial CFO of META. And this is in the late 90s when I was a lawyer. And somehow through, I think your father-in-law, I think through Don Horning, Gerhard found me and said, we need a lawyer who can tell me yes instead of all the lawyers who've been telling him no about a fund he wanted to do. So I flew up to Winnipeg, and I guess I told him yes. We figured a way to do something called a subvention certificate for Pennsylvania investors, which is no longer used, but it was a solution to allow some investments to come in from individuals at that time. And so I got to know Gerhard. And we were friendly, went to a few conventions, which, by the way, if you've not been to a META convention, again, there's one coming up in Richmond in November, first weekend in November. I got to say, there's a lot of META here today, so bear with me. Gerhard, being the wise man that he was, had my number, I think within a few days of me selling our company in 2005, I got a call from Gerhard Priest. And his question was, so Alex, I see you had a nice transaction, you've sold your company, what are you doing with the rest of your life? And that's the first person to ask me that, that's very good. And he said, I'd like to have, if you're willing, I'd like to have your talents. And by talents, he meant in the biblical term, I would like your gold, but I would like more than your gold, I would like your brain. So I learned the two meanings of talents. I think I'd heard that, but he reinforced that. This is a true conversation. I'm not making this up. And so I said, sure. He said, when you join the board of META, get involved, I want you to become an impact investor. At the time, Gerhard, this was in 2005, 2004, 2005 I joined, he had was just forming a new concept called microvest. So those of you in the who've heard of microfinance, I think a lot of you here today probably are aware of microfinance. There's a lot of groups doing that today, some also here locally. Hope International, and there's a lot of folks doing microfinance. 15 years ago, there weren't quite as many, but the insight that Gerhard and META had was to do it in an organized fashion through finance. So META joined together with CARE International to raise $12 million to form a financial institution, Microvest Capital Management, to fund microfinance institutions around the world. So they weren't going to be the microfinance bank. They weren't going to make the loans to the small entrepreneurs. They were going to be the funding mechanism to fund the banks that made the loans. So that was the insight. It was the first of its kind to be sort of that fund of banks. And there's others now that do that as well. But interesting that story, Gerhard got me to go around with him to raise money for the initial $12 million. I was one of the initial investors, as Ruth mentioned. But that $6 million that META raised and CARE raised in their $6 million was very difficult fundraising. In fact, the chair of our board, who's still the chair, Bo Cutter, who still is, well, he's now retired from Warburg Pincus, a big Wall Street bank, who's the chair of Microvest, said that $6 million that he helped raise on the CARE side was some of the hardest money he's ever raised in his entire career. And it's the guy who's on Wall Street. Because, let me get this straight. You want us to invest in a fund that's going to loan money to a bank that's going to loan money to a poor entrepreneur who's making a few dollars a day. And now how that's supposed to work? There was a lot of skepticism. I went to a number of your typical meetings, people who have been pre-qualified to invest, high net worth individuals, et cetera, who have the money and the ability to invest. And there was always one or two interested, but more than that I got, this guy's asleep, that guy's left, this guy's playing on his BlackBerry, no iPhone then, so Canadian friends that were still BlackBerries in those days. But we did it. And today, Microvest is now, it's actually more than 135, it's now over $300 million and rapidly on track to hit $500 million in the next, hopefully in 2016, for sure by 2017. And from that initial fund, Microvest 1, which, by the way, in a very tough economic time, remember that we had this thing in 2008, the economic recession, where most of your portfolios probably didn't do quite so well in 2008, 2009. That fund that was started in 2004, 2005, and wrapped up about 8 years later, returned about 7% annually to those investors. So anyone who put their money into investing with the poor around the world, 2004, actually survived the financial crisis better than a lot of other investments did during that time. That's remarkable, right? So the premise of impact investing is not that it's charity, right? In fact, it's the opposite of charity. It's business. We expect a return, right? And if we don't get a return, we know that there'll be no follow-on funds. Fortunately, since there's been a return in Microvest, and 6 or 7% in that first fund, now we have Fund 2, Access Africa, a short duration fund, which is a money market-like fund. I'm not sure how much your money market-like funds are paying you today, but Microvest is paying between 3 and 4% for monthly liquidity. Pretty good. Making small loans to microfinance banks around the world. But on this point, the difference between business and charity, one of my favorite stories is one of my first introductions to microfinance was going to Nicaragua. My brother and I and some others who here have probably been to Nicaragua. There's an institution there called Mi Credito that MIDA started a number of years ago. That is now flourishing and doing very, very well. Impacts hundreds, if not thousands, of local entrepreneurs and farmers. But one of the first trips Gerhard had me on was going out to this village called Tuisepe, outside of Managua, to meet a couple of farmers who had gotten loans. And one woman in particular will always stick with me. We went to her hut, and indeed it was a hut with a rudimentary fenced-in yard, I would say. It was really not quite a farm, but she had 10 cows. And she had put, with those 10 cows, her 10 children, not only through high school, but into college. All of them, she said, were going to go to college because of her cows. But that's amazing, right? But what's more amazing is that she had a bone to pick with the loan officer that day. Something was not amiss with how he was servicing her loan. Okay? So here's a poor woman in a rural village in Nicaragua who's farming cows to send her kids to college, but she's not in an unequal position. In fact, because she's the borrower, she's in a position of strength, right? You need to service me. I'm paying you. I'm giving you a return. I need service, right? Think about that. That's a very different position than if someone had come and bought her those cows. She had earned those cows, and she wants respect. And indeed, she got the respect that day. And that story will always stick with me as that is the difference between doing business and giving loans or investing and giving handouts. We all know what it's like. Hey, sometimes we do need, in a tough time or after disaster or whatever it is, maybe we do need help. We need a handout. There's no doubt. Philanthropy, generosity, I'm all for it. But if we're going to change the world, we have to do it in a way that empowers people to give their loan officer a little bit of grief when he's not quite living up to the standards that she expected. Very powerful story in my view. So from Microvest, and that was where the focus when I got involved in META, and I'm still on the board there, and it's quite a good organization. Has really moved into, it's based in Bethesda, Maryland, run by Gil Crawford, have an excellent board made up of a number of Wall Street folks and some us entrepreneurs on the META side, which is interesting working together. I said I really don't speak Wall Street, but I do speak entrepreneurship. And it continues to grow and continues to be, a real tribute to the values of META. And on that point, I want to stress again, the two organizations we talked about today are META, about Microvest and Sorona, have a couple things in common. One, META, as a nonprofit organization, could have said, right, we want all of our money to flow through our organization. We don't want to be a $10 million, $20 million organization. We want to be a $1 billion organization or whatever. We want to be the biggest and the best. They did not say that. They said we want to spin out our best ideas and seed the rest of the world and allow others who are not necessarily Christian or Mennonite or et cetera. We want to seed those values that we have of business solutions, poverty into the rest of the world so that those who are not familiar with our traditions and with our faith can also latch on and understand and be part of the solution. So META could have done Microvest on its own, right, essentially. There's no reason it couldn't. I think our $6 million got raised faster than CARE's. CARE is an organization 10 times as large as META, at least. But no, we want to partner with someone else to do that and take the message of microfinance and the ability to invest in microfinance out into the world. So they've done that, and it's a wholly independent organization that META has its DNA in there, but it doesn't have to be wholly owned. I think it's really another great lesson. I like to say there's three criteria to invest with META or Microvest or Sorona, and I think this speaks to the META DNA. There's three things you have to do to invest in this space. One is you need success, right? You don't have business success and you don't have capital. If there's no capital invest, well, there's no capital invest, right? So you have to accept. There are a lot of successful people out there with capital, right? And two, you have to have vision. You have to have a vision to go beyond the normal investment criteria that are offerings that are out there and put something in the bank. And you say, wow, I'm going to try something new, like this microfinance stuff, which sounds cool, but I don't really know what it means and is it going to work, all this stuff. You have to have vision. But the third thing you need to have is humility, right? Humility to invest with other folks who have been there and have studied and who have done it. It's not about, in this case, it's not about META being glorified and building some massive company. It's about how do we get more capital in the hands of the poor so that they can run their business. That's what it's about. So it's not about our name, our brand. It's about seeding it out into a broader organization that can reach out and get capital from other groups. And indeed, Microvest does that. They've gotten, one of the first big investors was from Prudential. They've accessed Wall Street money, and they're doing now with major foundations, both in the U.S. and in Europe. So that's another thing. And again, I think META could not have accessed that capital. I want to turn a little bit now to Sorona, which is META's latest iteration, and it's a private equity. So Sorona, as Ruth said, it takes its name from a Sorona dairy in Paraguay that was started in the 1950s, a group of Mennonite business men, as they were at the time, business people, but men, all men, unfortunately, at the time, who did this dairy in Paraguay. The dairy became so successful, it was at one point providing over 2/3 of the milk to the entire country. So quite a great tradition there. So, and META has always, over its history, done direct investments, like Mi Credito, like Sorona, in different projects around the world where they helped to fund certain businesses directly. So it was META, through its reps around the world, making direct investments here, there, around the world. The insight that Gerhard and some others had over the past decade was that's really not an efficient model. Okay, you can sit in New York or London or Lancaster or Harrisburg or wherever, and you can think that you might know what's going on with your company in Kenya, maybe, or Asia or India. But what if something goes wrong? What if the client has a question or needs some strategic advice? The time spent traveling and the frictional costs are very high to doing direct investment. So if you hear of folks doing direct investing, and there are in this space, investing internationally, directly into companies, you can come talk to me, and I'll probably persuade you not to do that. Or have a very skeptical ear whether that is truly sustainable long term. So in contrast to direct investing, which Meta has been doing, successfully I might add, because they do, Meta has been successful because they have people on the ground around the world. To really access, to really grow and do more in the space, we're to make an investable asset class, decided we need to do a different model. And that model is investing in funds. So it's finding local financial people who know their country or know their region, know the entrepreneurs who are up and coming, and know how to make those investments. So we will fund the funders. In other words, a fund-to-fund in the private equity space. So Sirona is not a direct investment vehicle. It's a fund-to-funds where our job is to go out and find the best private equity managers around the world who can invest in the company. Now, a video, if we had internet access here, would have shown you a very interesting model, which I was going to highlight, but I'll try to describe it in words. The fund that we're invested in as part of the video is called Africa Invest, or Tune Invest. It was started in Tunisia quite a few years ago. We are now invested in their funds 3 or 4. We're in a couple different of their funds, but it's run by Tunisians and North Africans themselves, who have been trained in Europe and the US. So these are leading business minds who went to the best schools locally and also the best schools internationally and have come back to their home country to make investments. The video was showing was one example of a company called Revitalization, which is a milk producer that works with 5,000 smallholder farmers. Some of these farmers have 1 cow. Some of them have 10 cows. Some of them now have 35 cows. But Revitalization, through the investment from Africa Invest, getting money from folks like Sirona, and we're not the only investor, there's other international investors, took that company from producing, I forget, the numbers are there, of course, and any dairy farmers here today will think these numbers are really low. I think it was like 35,000 liters per day they were producing initially to several 100,000 liters per day of milk, which I'm sure for Lancaster County is probably small. But they are now the number 2 producer of milk and dairy products, yogurt, et cetera, in the country. And the leader is a company you might have heard of called Danone, major French conglomerate. So here are these little 5,000 smallholder farmers competing against a multinational conglomerate and doing very nice returns for their investors. So that's the type of company that we try to find the fund managers to invest in, who find those companies to make a return. Dan, how are we doing on time? I'm going to take a time check here. When is my, I want to get to a group discussion here too. Where's mine? Okay, good. So I'm going to walk through a little bit of Sirona, then we're going to kind of get to trying to get some discussion, some feedback on hearing that. There's a couple of things that are noteworthy that's going on in the world today that you might not hear every day on CNN or whatever TV station you're watching. When this video was filmed a couple years ago, it was the start of the Arab Spring. And our production company called me. We were all funded, ready to go, ready to take off from New York. Hey, we hear there's turmoil in Tunisia. Maybe we shouldn't go. We're going to be in danger. So we talked to Africa Invest, and they're like, guys, don't read the headlines. Come on over. You're going to be fine. The country's moving on. Yes, there's a few things going on in the capital. It's fine. The fact of the matter is, leaving aside Syria situation, which is admittedly a mess today with the migrants, et cetera, most of the world, business is getting done. Most of the world, the poor are not as poor as they were several decades ago. In most of the world, the rising middle class is not an object of our charity, but should be the object of our desire to do business. In India alone, in the last 2 decades, okay, India is a country of about 1 billion people. I think they're the most populous in the world now. I think they passed China sometime recently. India alone, 300 million people, population of the United States, so the entire United States, have gone from $1 or $2 a day to about $500 a month. Okay, now think about that. That's our entire country going from $1 or $2 a day to $500 a month. Maybe that sounds like a lot to you. Maybe it doesn't sound like too much. It's enormous change in that country. Same thing in China, maybe even more so. But what it means is that those formerly poor, who were desperately poor at $1 or $2 a day, are now able to afford many things that are perceived as middle class. When I was last in India, one of the most insightful things, I had all these meetings with these business guys and companies and looking at windmills and all this kind of stuff, all this very interesting stuff, fantastic presentation, as they say. The most interesting thing was the afternoon I spent with the rickshaw driver, okay, outside the hotel. Because the rickshaw driver had a compressed natural gas rickshaw. Right? And think of that. We seem to have a lot of natural gas going on in Pennsylvania here. How many people have a natural gas vehicle? None, right? Well, the rickshaw driver in India, he has a natural gas vehicle. And it totally transformed Mumbai from, or this is in Delhi, actually. Delhi did this. Mumbai is still kind of a mess. But Delhi cleaned up their air by forcing all commercial vehicles, including rickshaws, to go to compressed natural gas. And so I was talking to this guy as he drove us around to the sites and bought a rug that I brought home in a suitcase that my wife doesn't allow into the house, but that's another story. He transported that rug for me. He told me what it's like to be in the middle class in India. So it's very fascinating, right? So he's making a few bucks a day driving tourists around, and he makes about $500 a month. But he can afford an entry-level computer, right? He's sending his kids to school. He's eating better. He may even take a vacation. His house is improving. His water's better. So let's think about that. Where is the business opportunity, right? There's 300 million people who want some type of communication device, want better education, need better housing, eating better food, cleaner water. That might be a pretty good area, pretty good sectors to invest in India, if all those people are now suddenly able to want and afford those things. And it's not just an India story. It's not just a China story. All Southeast Asia, Latin America, even Africa, which is still, in some ways, lagging for a variety of reasons, many of them political. Those things are happening. And those present investable opportunities for businesses who are savvy and say, hey, I want to supply milk. I want to supply water. I want to supply housing. I want to supply education, electricity, whatever the case may be. So in Sirona, we believe that if you are not investing internationally in these opportunities, in the rising middle class around the world, you're missing out on opportunity. Can we put those slides up? A couple of slides that I want to just point out what's going on in the world today. This is a chart from 1950s to today. The bottom line is high-income countries. The top line is growth rate of low-income countries. Those growth rates, which were, have their ups and downs, of course, were fairly similar till about a decade or a little more ago. Those growth rates are now diverging. You may have heard there were some fears on Wall Street about China the other week, right? Do we know why there were fears on China? Not because it was going to drop down to our growth rate of 2% next year. No, China's going to grow 7% next year. It's just not quite the 9% they have been getting, right? So the growth is slowing, but it's still triple or quadruple what we're getting. Same is true the rest of the world. Yes, there are fears that from time to time that the emerging markets may slow down, but they're slowing down from a much higher growth rate than what the West. Europe is basically flat. The U.S. is growing a little bit more, but those growth rates are diverging. Those trends will continue. Over the next year, developed kind of 1.6 on average between now and 2050, 1.6% is estimated growth in developed countries. In the emerging Sorona target regions, it's over 4%. Where would you want to invest your money? In the low growth or the high growth? Similarly, it's interesting here, I think this is an interesting point. Share of wealth in the world. This is important. When you think about business versus charity. Today, 72% of the world's wealth is in developed countries, right? US, Europe, Australia, etc. Russia and China is 10%, and the Sorona target area is about 18%. However, 35 years from now, 2050, projections is that only less than half of the world's wealth will be held in developed countries. Russia and China will have a quarter, and the rest of the world hopefully a third. That is dramatic change in the economies of the world. You can go to the next slide. I mentioned this a little bit before, the forecasting of a surge in the middle class. People earning between $10 and $100 per day. That $500 a month thing that I was mentioning. 2009, 1.8 billion people defined in the middle class. By 2030, nearly 5 billion people defined in the middle class. What that's called is an investment opportunity. You can see the growth in spending of the middle class here in North America. Potential negative growth, 4% overall for the next 40 years. Europe, even less. South America, over 100%. Asia Pacific, Africa is the highest, as I mentioned. Middle East, North Africa, also lower because of some political issues. But Africa, South America, Asia Pacific, that's where the growth is happening. One more slide. And likewise, the contribution of, if you think of it in the U.S. context, who are the drivers of growth in our country? It's not the big companies, actually. The drivers of growth are people like you. It's the small business folks who create the jobs in the U.S. Those are the ones who add. It's the Whitmer Construction, it's the Warfels, it's all you guys here who are going out and driving growth. That fact is happening around the world. The share of the small, medium enterprises, their share of the total job growth around the world is growing. And that is projected that eventually those economies look much more like ours, where the middle class is driving the growth. And I think it's might be one more here. No, that's fine. Okay. So that is sort of the business and the investment thesis of why Sorona has raised money. Now, a couple words on how they've done it. Sorona was a fund within MEDA for a time being managed internally, and the board about 4 years ago decided that to really, again, set this free, just like we did with Microvest, we need to spin it out and make it for profit. So here's a nonprofit, charitable-based organization, based on business, however, that said, we don't want to hold this internally. We want to spin this out to the managers who will own it for profit. Right? It's easy to say, but when you think about it, it's very radical for a nonprofit to spin out its former employees to say, no, you go out and earn profits. And by the way, your salary is going to probably quadruple from what we're paying internally, right? There's a lot of stuff goes on there at a board level, a lot of board discussion. There was some consternation, I'll admit, among the board committee that worked on this. But it was the right thing to do. And how do I know that? Fund 1 in Sorona raised $35 million, mostly from individuals and business folks who were, mostly in the MEDA. Maybe half the money was MEDA folks, there was half non-MEDA folks, but mostly in entrepreneurs. Fund 2, however, has raised over $150 million. That money would not have been possible to come to MEDA. Here's why. Sorona was able to go out to the Canadian government and say, invest alongside, take some of the risk out of this investing for us, and invest alongside of us. Instead of doing aid, do trade. The Canadian government said, you know what? We spend all this money every year on aid across the world. What return do we get? We're not sure. Maybe it's none. So they invested $20 million in Sirona. Would not have been possible if Sirona was a part of a nonprofit like MEDA. It was possible there. That $20 million serves as a first loss guarantee to the investors. So if there's any loss in any one individual investment in Sirona, the Canadian government pays that loss. Pretty good deal, right? And even better, the Canadian government says, we don't know what to do with profits on our $20 million, so guess what, Mr. Investor, Mrs. Investor, you keep the profits on our $20 million. So the profits on our $20 million over the next 7 years go to the other investors. So we can only lose, we can't win. I like that. It's a good thing. But MEDA and Sirona convinced them to do that. Likewise, the U.S. government, through OPIC, or not OPEC, OPIC, the Overseas Private Investment Corporation, the U.S. government, one of 2 or 3 branches of the U.S. government to actually return money every year to the federal treasury. Okay? They actually make money, so it doesn't not costing any of you a dime to support OPIC. They actually make money on their bonds they issue by charging a spread. They have agreed to loan 1/3 of the money that Sirona invests to Sirona at phenomenal interest rates. So they float a treasury strip, they call it, and I think our last one was 20 basis points. Well, Lyle knows what that means. Plus a spread, I think we're paying 65 basis points for 2-year money. Pretty good, right? You take that, right? Take $80 million at 65 basis points? Yeah, so would I. So very favorable interest rates to support, again, to support investment. The OPIC investment, there's one, another quick moment on this to show how MEDA, Sirona, is a leader in this space. So OPIC, through a new chair, Elizabeth Littlefield, did a call for funds. They want to get into impact investing. Elizabeth had come out of the microfinance sector, doing a lot of things through the World Bank, and very knowledgeable about impact investing. She wanted to incentivize private equity investing through funds, right? So she did a call for funds. Anyone in the U.S. can put your ask in, and the U.S. government might fund you. They got 80-some responses. Hey, we'll take that. That's great. 80 responses from 80 different companies. They went out and did diligence on. They eliminated about 50 of them internally, and then 30 of them, they hired Cambridge Associates. Anybody in the financial field will know a major national company that evaluates fund managers. Interviewed all those 30. Sirona was one of them. And they picked 6. So out of 80 who applied, 6 were chosen. Sirona was one of them. Sirona is the only company that's gone to market. That's drawn the money. The other 5, 2 or 3 probably will not have basically failed. The other 2 are still hoping to draw some money but have not yet. So not only are we thought leaders in MEDA and Sirona, thought leaders in trying to improve lives of the poor, we're also thought leaders in changing the minds of our leadership in this country internationally. And in fact, Sirona has been recognized at a number of conferences recently as being one of those who actually does put private public dollars together in this space. It's quite a remarkable achievement. Again, not possible if Sirona had been part of MEDA as a nonprofit. Quite remarkable. So I think it's perfect. I'm about 15 minutes remaining. I want to. I know that all these breakfasts are supposed to be interactive. I want to get some feedback. Some folks want to take maybe 5 or 6 minutes just at your table, and let's back up a little bit and think about in your own life, in your own giving. Are you trade? Are you aid? Right? It's the old debate. There's a couple books. While you're starting to think about that, when do we need aid and when do we need trade? Basically the question is, are you buying any of this that I'm selling this morning? I want a little feedback. Does this make sense? Or Hartzler, you're a greedy capitalist. You're charging poor people interest. I don't like it. We're not inviting you back. That's the answer. So I want a little bit of feedback on this. What do you think in your group? And then we'll try to go around and get some quick thoughts on that. While you're starting to think about that, I want to recommend a couple books to read. Since this is a college, even though it's alumni, the alumni still read, I think, right? 2 books, particularly, that are now getting a little bit old. They were really the hot things when I started in this field. One is by Jeffrey Sachs. You may have known him. If you haven't read The End of Poverty, you should read it. Very interesting. He is more on the aid side, but phenomenal economist. Very interesting read. Somewhat technical, but very good. Called The End of Poverty, pretty easy to remember. His, I don't want to call him nemesis, but his, say, challenger, is William Easterly. William Easterly, formerly of the World Bank, got fired for being heretical in his thinking. He has a book called The White Man's Burden, Why the West's Efforts to Aid the Rest have done so much and so little good. So much ill and so little good. William Easterly. Those two books I recommend to your reading. It's the debate between trade and aid. Another one that I want to recommend, so actually it's three now, maybe even four. If you haven't read Dead Aid, D-A-D, Dead Aid, by a Kenyan economist, Moyo, what's her last name? M-O-Y-O. Also recommend that. If you're interested in this topic at all, she is one of the leading voices from Africa speaking about what happens when the proverbial ship full of free stuff sails into the harbor in Mombasa and the farmers or the shoemakers no longer have a market. So those are the three books. So let's try to take about 5 minutes in your groups, talk about it. And it's really we don't have to talk about academics, but just sort of from a gut perspective. What's the role of trade in the world? What's the role of charity and aid? Okay, we have about just a few minutes left. Anyone who wants to stay after 9 certainly can, but I want to get you back out to your day job. Comments? Anyone? Dan will walk around and give you the mic if you want to jump in and reflect on anything was said this morning.
Thanks, Alex, again, for a great presentation. I was wondering, because you mentioned some of the returns that the investors are getting, and I'm assuming there are costs involved in the different layers. So what sorts of interest do the ultimate borrowers pay for their microloans? And also, you mentioned that you're working in Northern Africa, and I'm assuming other countries where Islam is the predominant religion, and there's some religious objections to payment of interest, for example. And how do you get around that?
Yeah, two great questions. Interest rates are, not to hedge them, but very country dependent. They do, quite honestly, seem high in our context, there's no doubt, but it's also in the context of what's the alternative. So if the money lender is at 50% and the microfinance bank is at 30%, it's still quite a big achievement. The hope is that as more capital comes in, the rates will come down. But you're very right, there are very high costs. Really, the question becomes, for the microfinance lender, is the business viable? Can they pay it back? And how quickly can they turn it around? And so there has been some criticism of microfinance, particularly in India, where some of the rates got usurious. They were lending for not for business, but for personal consumption. And a lot of borrowers got in trouble. So there is definitely some interesting in that. If you're interested in the topic and haven't read A Banker to the Poor, Muhammad Yunus's book, he has a really great explanation of how it works. The second one was, yes, we are in Muslim countries, particularly North Africa, but also in Southeast Asia. Indonesia is actually one of the largest Muslim countries. Sirona is doing private equity investments, so it's not loans. But we, Sirona Micro, have not found that, because mostly we're working through other institutions who are there, and it's not the Westerner coming and doing this. They're being serviced by the local population, local lenders, which is an important point, I think. Are there other questions, comments? Anyone want to take on the topic and challenge me on this a little bit? It's good. There's another argument here. I don't mean to say that mine is the only one. There's a very strong argument on the other side. Yeah, go ahead.
I just have a question. So many, especially third world countries, their governments are so corrupt. There's so much corruption throughout. How do you find working around that, being an institution within the country? How does that affect what you're doing?
Yeah, that's a great question, and we get that question at every investor meeting. So it's very apropos. The interesting thing is that we actually think that business and finance moves the country towards transparency. If you think about this for a minute, if you want to run your company and you just want to make profits year in, year out, and you don't care about paying taxes, whatever, you might be able to do that in some countries if you pay off the right person, whatever. But if you want to sell your company to Coca-Cola or Procter & Gamble or somebody else, you better well have your books in order. You better be paying your taxes. So what we actually see is that when the investment fund comes in and talks to the entrepreneur, the two-book thing goes away. We're now on the books. We're now paying our taxes. Okay, that's not directly related to the corruption at the government level, but that is a very important thing that we think is happening globally as the economics takes over and kind of gets away from the politics. My comment on the corruption thing is, yes, it's there, but it's everywhere, and we deceive ourselves if we don't think if we think we're immune to it in the West. We're not. The question is, how do you deal with it? What are your policies in place? If you're, what do the employees do if asked, and how do you deal with that? But we think as individual employees and business persons become more empowered, they're also going to demand better services from their government. And we think indeed that is happening. Particularly if you look at Latin America as a great example in my view. Really a mess politically over in the 80s and 90s. Huge debt crisis there today. Chile, some people say Argentina, maybe not so much, but Brazil. I mean, there's all these countries have really reformed in dramatic fashion, and their economies have benefited from that. But it's a great question, always asked. Yes.
I guess the question I have would be, I love hearing about this. This is great, and the question for me is, where's the line on return on investment? You talk a lot of, you talk 7% during the downturn in the economy. If you think about, if the return was 50%, you might think, well, maybe we should be helping the poor more. But if you didn't have any return, then you wouldn't be getting investors. How do you, as an organization, determine where that margin is? And do you see? I guess the other part of it would be, I would assume a lot of investors aren't just in here to make the money. It's, hey, this is a good cause as well. Do you see a lot of people taking their profits and just saying, like the Canadian government, keep them? Or do you just see a lot of them, like, this is part of my portfolio, this is how I'm going to invest? Yeah,
so it's a really interesting debate. When we first, and I think it was more heavily weighted towards let's do some good with our investments earlier. What we found in Sorona is, and even in Microvest to some extent, that if you're talking to, quote, serious money, and you start talking about doing good, they're busy now. They won't take your call. They're done. So we need to be rigorous in our financial reporting, be rigorous in our financial investments to try to come up with a risk-adjusted rate of return. For microfinance, Microvest, they're in that 3 or 4%. For liquid money, it's 7 or 8%. Microfinance is quite a bit less. For a private equity fund, if you're doing 5 or 6%, you're not going to be in business. A lot of people in this room can find you a better investment than that for private equity. So we need to be in the mid to high teens, low 20s. But those aren't loans. Those are investments in a company, help the milk company grow, sell to the big conglomerate, and make that change. So we need to be risk-adjusted rate of return. We need to be market. If there's going to be legs to this, it's really going to grow and be a real viable asset class, which I think it is. It needs to be comparable to others. And I think, and honestly, I think it can be. Because if you look down, and we're doing those things like making the companies pay taxes, treating the employees well. Some countries, the idea of a vacation is new. Time off during a day is new. Work conditions, all those things that we take for granted here in working conditions, actually are good business. And so we're helping to instill some of those things and actually help drive some profits.